XAUUSD, popularly known as the gold spot. What an interesting situation we have here on this current market structure. The new week begins. The trading activity has begun on a slightly weaker note, as you will see selling pressure pushing price to the downside, and in fact sellers are finding a barrier around the 1982 level since in the last 4 to 5 hours now. The price action has now broken down that ascending trend line. That ascending trend line we identified last week. We are going to be looking at that in a moment. Well, for me personally, and looking at it from the fundamental perspective, this breakdown could be linked to the modest increase in the US Treasury bond, which has influenced market sentiments during the early hours of today. Nevertheless, it's crucial that to approach the situation with patience. It is necessary to validate this breakdown, as market participants are currently exercising caution before making any significant adjustments or placing a bet on this particular market. So it's important for us to wait for confirmations before we jump into any positions here today. Now, before we go into the details here, let's run through the daily time frame where we want to look at what is going on from an holistic perspective. So the same structure we had last week still remains, as you will see right now. For those of you who are part of our live session last week, the structure still remains the same, as you will see here. Now, it is worthy to note that since the month of March, price action has been within a range precisely that's between the $2,010 area and the $1,810 area, to emphasize the level of indecision in the last 7 to 8 months now. However, something interesting happened through the second week of the month of October, when we saw price broke out of that descending trend line, which was supporting the bearish momentum since price found new high around the 2074 level in the month of May. Now, with the breakout of the descending trend line, from technical standpoint, we do expect that price may come back to retest the structure, which interestingly lines up with that demand zone at the 1900 area. You can see how the 1900 area played a major role in pushing price to the upside, and this interestingly shares a confluence with that descending trend line. So we don't know if price will retrace back into the descending trend line in anticipation of an uptrend continuation, or are we likely going to be seeing price break out of the 2010 area to incite an uptrend continuation? Now, before I scale down into a lower time frame, I want to quickly emphasize how important the 2010 area is and the 1900 zone. Now, for the 2010 area, you will see how this area had been a strong selling niche in the past before it was broken to find a new high. And as soon as price broke out to find new high, we saw it drop below the 2010 area in the month of May, and since then price has been trading below that structure. Now, despite the strong bullish momentum we saw at the beginning of this month, the inability of buyers to break through this area in the last couple of weeks is a red flag that sellers may still be very strong within the zone, and the possibility of profit-taking activities hereby increases. If this persists, we are likely going to be seeing how many pips move to the downside. That's about a minimum of 850 pips to move to the downside, and a maximum of about 1,000 pips to catch if price drops to the downside. So it is very crucial for us to understand what is really going on around below the 2010 area, that is around the 1980, to see how we are going to be capitalizing on the next move. Will it be a bearish momentum for a retracement, or will it be a breakout of the 2010 area? Now, scaling down into the 4 hours time frame, we have a very interesting setup to work with. Now, on the 4 hours time frame, what I did here was to take into consideration the nature of price action throughout the month of October. And it's quite clear that price action has been on a strong bullish momentum throughout the month of October, giving us a couple of ascending trend lines to work with ahead of this week. Now, if we now zoom into the current structure, that is the nature of price action in the last 2 to 3 weeks, it's quite clear that price is consolidating, of course, between the 2010 and the 1970 area. However, price still appears to be respecting that ascending trend line, and the fact that price is still above this robust demand zone at the 1970 and the 1955 area still makes me consider buying the XAUUSD. And in fact, if we take into consideration the geopolitical tensions in the Middle East right now, which increases the concerns that it could escalate to the whole region. This kind of situations usually increases the sentiment of placing capitals in safe haven assets such as the gold. And because of this, I'm still going to be leaning towards a bullish momentum in this particular market. However, if we take a closer look at what has been going on since the beginning of this new week, you will see that price appeared to have broken down the ascending trend line a little bit, as you will see here. Now, the question at this juncture is this breakdown a true one or a false one? If it's going to be a true one, then we want to be seeing something like a retest of structure. That is, buyers are finding it difficult to climb back above the ascending trend line. Then this will give us the privilege of joining a bearish momentum. And in fact, if price action goes on to take out the demand zone, then we want to be looking out for more selling opportunities. But if it turns out to be a false breakdown, price climbing back above the 1990 will be a good opportunity to buy, and a further breakout of the 2010 will welcome more buying opportunities. Now, to have a better perspective into what is going on at this crucial juncture where price is around the ascending trend line and the 1990, let's scale down into the 1 hour time frame to see what is going on there. Now, on the 1 hour time frame, we begin to see how the market participants have been trading since the beginning of this week. And in fact, for the first 4 to 5 hours of this week, price was confined within the $1,993 level and the $1,987.50 level. And of course, you know that whenever we have a range like this, we wait for either the breakout or the breakdown of the structure for an opportunity to trade. Now, interestingly, the support line of this range at the $1,987.50 level shares a confluence with that ascending trend line we spotted on the higher time frame. Now, we saw the breakdown of the structure happen here, and instincts will tell us right now that we want to be getting ready to sell. As you all know, from a technical standpoint, we expect that after price breaks down a trend line and a key level like this, we expect some retest of structure to incite a downtrend continuation. However, the fact that price still remains above that robust demand zone we identified on the higher time frame around the 1970 and the 1955, we will not want to be jumping into a sell position just like that. And if we take it a step further to look at the character of price action in the last let's say in the last 9 to 10 hours now, you will see how the 1982, despite the strong bearish momentum that started this week, had become a barrier for sellers to break through that area. And if we take it a step further to look at the nature of the week of these candles, as soon as price tested the 1982, you will see that they are sharp rejections of this level and zone, giving us insight into the inability of sellers to settle into this current structure. And for me, this is a sign that buyers still have a say in this market, and it could turn out to be a false breakdown of that ascending trend line. So how do we intend to buy this asset, and how do we intend to sell if that is going to be the case? Well, like I said earlier, that we are looking forward to breakdown, retest of structure to incite a downtrend move. Now, if price continues the momentum back into this ascending trend line, I'm still going to be skeptical of buying. So I want to see something like this price coming back into the $1,987.50 area and that descending trend line, and I see that sellers are finding it difficult to drop below the descending trend line, then at that point I want to start considering buying. Then if that happens, I want to be buying above the 1,990, buying above the 1,993 to maximize the potential of that move. Now let's look at this together again. Now we have a descending trend line here which has been supporting bearish momentum since last week Friday, as you will see here. Now a breakout of this trend line may start giving us an idea that buyers are coming in, but we are not going to be joining unless a retest of structure or the 1,987 happens. Then we want to be part of that uptrend move. So that is the only condition for me to consider buying. Now, if price action does not come back to retest like this, but instead continues to find new highs, then the breakout of the 1,993 will have brought price back above the ascending trend line, that is back into the buyer's territory, after which we want to be looking out for buying opportunities to the upside. So this is what we are going to be looking at to buy the XAUUSD for today. Personally, I still think that buyers still have a say in this particular market. However, if the opposite happens and price continues to drop to the downside, I will prefer to consider selling only if price takes out the buy positions around the 1,982, and this will give me a lot of confidence to start considering selling the XAUUSD. However, if we see signs that sellers are gradually gaining momentum, maybe something like lower highs and lower lows below the trend line, then we can start considering selling. But make sure that as soon as price gets into the 1,982, you move your stop losses on the sell position, secure your positions, because buyers will still push price to the upside from that area. And if price now breaks down, then at this point we want to feel comfortable selling the XAUUSD. So it's a simple setup we have here on this chart right now. Let's ensure that we mark out those levels on our chart, mark out the trend lines, mark out the range, as we will be needing them to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions, after which we want to be rounding up for today's trading session.